Right now, millions of Americans are asking the same question. Is the US economy actually getting better? Or are we just being told that it is? Prices are still high, rent feels impossible, jobs feel uncertain, and yet headlines keep saying the economy is strong. Today, we're cutting through the noise, the politics, and the hype to talk about what is really happening in the US economy right now. Not yesterday, not last month, but today. Stay with me, because by the end of this video, you'd all have a much clearer picture of where America is heading and how it could affect your money, your job, and your future. Welcome back to the US Report, where we break down what's really going on in America in a simple and honest way. Before we go any further, if you want daily US economy updates without drama or confusion, make sure you hit the like button and subscribe to the channel. It really helps the channel grow, and it makes sure you don't miss our daily reports. All right, let's get into today's update. As of today, the US economy is sending mixed signals. On paper, things look okay. Growth hasn't collapsed, businesses are still operating, and the system is moving. But when you look closer, especially from the point of view of everyday Americans, the story feels very different. January showed modest economic growth, mainly in the services sector. That includes restaurants, banks, healthcare, and everyday consumer services. This is the part of the economy that usually stays active even when people are nervous about spending. And that's exactly what we're seeing now. But here's the problem. Even though the economy is technically growing, it doesn't feel good for most people. Inflation may not be rising as fast as before, but prices are still high. Groceries are expensive, insurance costs are up, and rent remains one of the biggest pressures on American households. For many families, almost every paycheck is already spoken for before it even arrives. One major update today is that the U.S. government shutdown has been temporarily resolved. Government offices have reopened and federal workers are back on the job. This is important because shutdowns create uncertainty, delay payments, and slow down parts of the economy. For now, this brings some short-term relief. Paychecks are flowing again, and some economic activity that was paused can continue. However, this is not a permanent solution. The funding agreement is temporary, and another political fight could happen again in just weeks. Markets know this, businesses know this, and investors are watching closely. Political uncertainty doesn't crash an economy overnight, but it slowly eats away at confidence. And confidence is everything in an economy like the U.S. Another key update today comes from the U.S. Treasury. The government is still borrowing heavily to fund operations, and bond auctions are continuing without major changes for now. That means, in the short term, the system is stable, but experts are warning that long-term debt pressures are building. America is carrying massive debt, and at some point, that debt becomes harder and more expensive to manage. What does that mean for regular people? Over time, higher debt can lead to higher taxes, reduced government spending, or higher interest rates, staying around longer than expected. None of those options are popular, and all of them affect households in one way or another. Let's talk about consumers, because this is where the real story is. One clear sign of stress is in car sales. January auto sales were weaker than expected. Some people blame the weather, but weather is not the main issue. High car prices and high interest rates are pushing buyers away. Monthly payments are simply too high for many Americans, even those with decent incomes. This tells us something important. People are becoming more cautious. They're delaying big purchases and focusing on essentials. This is not what a confident consumer looks like, and the U.S. economy depends heavily on consumer spending. Now let's look at jobs. Employment remains relatively stable, but cracks are starting to appear. Hiring is slower than it was before. Job switching has cooled down, and companies are being more careful with new positions. Layoffs are not exploding, but they haven't disappeared either. This creates a feeling of uncertainty, especially for younger workers and people in tech, media, and finance. The Federal Reserve is another big factor everyone is watching. Interest rates remain high, and while inflation has cooled from its peak, the Fed is not rushing to cut rates. The reason is simple. They don't want inflation to come back. But keeping rates high for too long can slow the economy further and make borrowing more expensive for everyone, from homeowners to small businesses. Right now, investors are in wait-and-see mode. The stock market moves up and down based on expectations, not just facts. One day, optimism pushes markets higher. The next day, fear pulls them back down. This kind of movement tells us that confidence is fragile. So where does that leave the U.S. economy today? The honest answer is this. The economy is not collapsing, but it is not truly strong either. It is moving forward under pressure. Growth exists, but it feels uneven. Stability exists, but it feels temporary. And for many Americans, daily life still feels financially tight. This gap between official numbers and real-life experience is why so many people feel frustrated. When they hear that the economy is doing well, but their rent, bills, and debt keep rising, it creates distrust. And that distrust matters because belief in the system is a big part of how economies function. Here at the U.S. Report, our goal is not to scare you or sell false hope. Our goal is to give you a clear, realistic picture so you can make better decisions. Whether that means budgeting more carefully, delaying big purchases, or simply staying informed, knowledge is power. Looking ahead, the next few weeks will be critical. New economic data, government funding decisions, and signals from the Federal Reserve could push the economy in either direction. A rate cut could bring relief. More political fighting could bring more uncertainty. And global events always remain a wild card. If you have been feeling like something doesn't quite add up when you hear economic headlines, you're not alone. Many Americans feel the same way. And that's exactly why we do these daily updates on the U.S. report. Before we wrap up, I want to hear from you. Do you feel the U.S. economy is getting better, worse, or staying the same in your daily life? Drop your thoughts in the comments below because your experiences matter and others want to hear them too. And if you found this update helpful, share this video with someone who is also trying to make sense of what's happening right now. Thanks for watching, stay informed, and I'll see you tomorrow with another real-time U.S. economy update right here on the U.S. Report.